The market is volatile, the stocks keep going down. Then boom, we hit new highs. Everything is different now, but you don't gotta chase. Don't panic, don't stress. Time to realign, plan it out, invest. It's the First Fruits Podcast. We elevating with the First Fruits Podcast. No time for waiting, time to grow, give back, reinvest like that. Everything you need to know, the First Fruits Podcast. Let's go.
Hello, and welcome to the First Fruits Style Club podcast. Man, I hope everybody's having a great week. Good week for me. Today is Wednesday, right? Wednesday, hump day. If this is the first time you're seeing my show, I'm here every Wednesday. I try to get on by 10. My goal is I'm going to get on here by 10. Unfortunately, I didn't get on here exactly at 10, but here every Wednesday. So, man, today's topic is swing trading, right? Today's topic is swing trading. Stocks go down. Swing trading when stocks go down. Busy market, busy week. I'm going to go into a few different topics. So, man, also I had a great opportunity to speak today to some young men who may have had problems in their past, but they're working out of their past. And I was able to speak into their future. And I was able to speak about my favorite subject is stocks and investing in the stock market and the opportunity they have in this country, right? And I'm going to go into that, go into what I spoke to the young men about at the Philadelphia Juvenile Justice Center school program. Traveled to Philly last night, ended up speaking this morning, and got back here, man. So I've been on the road, and I probably will be doing more of that speaking. But, you know, if you're a teacher out there and you are looking for student engagement, all right, and you're looking for a speaker, man, look me up. www.donaldgreenspeaks.com, www.donaldgreenspeaks.com. And man, you know, my focus is on the stock market and getting students to understand the relationship between money and education. Right? A lot of times kids don't get that. They think they just going to school. No, you're going to school to earn money, right? To make a living for yourself. Sometimes we forget to tell students that part. So anyway, let's get into it right away. So today we're going to get into the Dow Jones Industrial Average. All right, but before I get in that, man, please, everyone, please like, subscribe, and share my show. Like, subscribe, and share my show, my message, getting my information out there. It's important that people understand the opportunity they have. They understand that investing is important. I know it's a lot of things online, but getting understanding and investing, getting some information on how to invest is very, very important. One thing I discussed with students, only like 40% of people out there actually have a brokerage account. Only 40%. So, man, directing people to get some positive information online is a must. All right. So let me go into the information, the disclaimer. Information provided First Fruit Stock Club and this podcast is for education, information purposes only and should not be considered financial investment, tax, legal advice. The views expressed by the host and the guests are their own and do not reflect the opinions of any financial institution, regulatory authority. Investing in stocks and others carries risk, including the potential of loss of principal. Past performance is not indicative of future results. Always conduct your own research with a licensed financial professional before making any investment decisions. The First Root Stock Club and its affiliates do not guarantee specific outcomes or returns. By listening to this podcast, you acknowledge that you are responsible for your own investment decisions. So look, let's go into charts. Man, it's been rough. All right. That second week in June has been rough, right? And it is important that not to look at it, it's been rough, but also look at it as an opportunity, and that you take take advantage of the opportunity in June that it presents itself. A lot of times as we look at the week, this is the week view, and we're thinking like, man, if I only have bought this, I only bought that. Well, guess what? You're getting a new opportunity to buy maybe at some prices that you didn't get. So if you liked it at one price, you should love it at a lower price. But what happens is, and we'll discuss it, the market communication change and things change, which can produce some hesitancy on your side, right? But as traders, man, when you see opportunities, you got to swing. And swing traders, put your bet and swing and put yourself in position, right? And I know sometimes that can be difficult, but if you're a trader, that's what you do. If you're an investor, that's what you do. You look for opportunities, you position yourself for opportunities, and that's what we. And looking at the Nasdaq once again, man, it's hit a week low, and it definitely has bounced off a few levels, but we're still trying to find out trying to find a bottom, right? Trying to find support in the market. It's very important finding support where buyers will come in and buy. And we're still looking for that. Nasdaq hit a new low today. It had that 1,000-point drop, and now we have gone past that 1,000-point drop. So sometimes now we don't know how far we're going to go down. Like I said, I always tell everybody that the stock market is a time machine. And the next one is the S&P 500. All right. And once again, if we're looking at the chart, we've also broken our support. So now we're going to see where we're going to go, how far we're going to go down. Things. All right. So look. So like I said, June is one of those months that that I always tread carefully, and I might have in June. I will have a quick a quick execution finger, right, where I will close out a trade early on. Especially when a trade starts to bleed too much. I had some trades in Micron, and some other ones. And I still have those trades, but I was able to, which was last Friday when I saw the market, because May was killing it, right? We'll fly with Dell, Micron, a bunch of other trades that I was in. The market myself and the club, we were doing well, and I was just warning everybody, like June is one of those months, man. It's a difficult month to trade. It's the middle of the year, and so it can produce some challenges for traders. And so therefore, in June, you really need to be on your P's and Q's. You really need to have a strategy to go in. And one strategy that I have is, sometimes it's like when you're in trades, and sometimes trades will draw down, like they'll draw down the stock. You'll buy it at something, and then basically the trade, the trade goes down. It draws down the contract price that you pay for Now it has become negative, right? So therefore, it could go down to 50% from what you pay for it, 30% what you pay for it. You have to decide on your tolerance level in June, right? That's what it's about. You have to decide on your tolerance level. And in June, my tolerance level is low. So sometimes you can say when. I know sometimes, as traders, it's like, man, I made the trade and I made, you do put all your ducks in order and you say, well, I'm gonna stay in here. But sometimes you get the timing wrong, right? And I was fine. I told everyone, I said, look, I'm gonna exit here in June, and which I did. We exited some plays. I mean, not at the beginning of May, but when I started I was looking at my modeling, my formula that I used to track the market, and I saw a few things I did not like, and I said, all right, I'm getting out these trades that I have. Now, we had 1,000 point day, which was crazy. It was the largest stock market, Nasdaq, largest loss in the Nasdaq ever, like uh 4 point something percentage. But it's the largest stock market um loss in the Nasdaq ever. When you have days like that, um, I, you have to kind of go in there, hold your nose as a trader. Got to hold your nose, go in and buy because those opportunities don't come. And as we see, we bounced off of that. We bounced off of that that time frame. We bounced off of it, and but guess what? We're back at it, and now we just hit a lower low, especially in the Nasdaq and in the S&P 500. So now it's like, okay, how far are we going to go down? And like I said, I was able to get out those trades, but I also got back in and positioned myself. And so I'm in the back in those trades again. I have a couple of trades going on, and I'll show the club tomorrow. But like I said, when you trade, it's not all rose petals. It's not rosy all the time. It's sometimes your account is going to draw a little bit, and you have to decide when to say when and when the courage is. So I'm in here now. I just wanted to reposition myself, and I believe June is January, February, March, April, May. June is the end of the second quarter. So just like myself, institutional traders are going to be closing their books, so I believe that we may get a little run sometime in June. Don't know, right? But therefore, you have to position yourself to get ready for the run. All right. I mean, that's my thoughts. Now it could change. I could be absolutely wrong. June could continuously be horrible, but that's my thoughts right now. So that, that's one of the things that happens in June that makes me so. All the bad news all of a sudden just rises in June. You know, oh, the Fed chair, what's he going to say? The Fed chair is coming to speak. The new Fed chair, right? Is he going to hike rates? Right? The president's tweeting out, and we have more issues with Iran. All the different news, all the market communication, and it's for the most part has been negative. But as traders, I want you to understand that this news could change on a dime. That's why you just gotta hold. Sometimes you have to hold your nose, and you have to have a tolerance of this. And I've been through this a few times. You know what I mean? I've been through this, and you know, um, and I'm not saying that markets bounce back all the time, but this has been a theme for the last few years. It's so much money out there in the markets right now because we're in a new phase with the data centers and AI. So when you have um, a new theme in the market, you have to there's going to be volatility in the theme, especially this month. But you kind of just have to stay in the theme because the theme is still there. AI isn't going anywhere, right? It isn't going anywhere. It's still here. They're still developing. So sometimes you have to hold your nose and just put your dollars in. Sometimes I'll be honest with you when I don't I just close the account. I say, look, man, whatever. I'm in it, and we're gonna see what happens. And I'm gonna put my money down. And it is hard, right? It's hard seeing your account go in the red. but you have to be able to take both sides of the trade. You got to be able to take the positive and the negative side of the trade. It's very, very important, right? And a lot of times investing and trading is the mental side that gets people. A lot of people can't handle have a in regards to your relationship with money, a lot of people cannot handle seeing their account go red, seeing account go negative. If you're an options trader, swing trader, that's a normal thing, right? Goes red. And because if we look at market dynamics, it's supposed to go red initially, right? It's supposed to go red, all right? And then it will come back as the real value of the stock or of that position is revealed. All right. So look. All right. So next thing, I'll get into that next week. But we do have some reports coming up. I think the um, producers price index. I think that's coming up on Friday. I guess I'll talk about that next week. And this is where we want to see if inflation, when the producers, meaning companies and manufacturing companies, are they raising their prices of their good of the raw goods that they use? And as they raise their prices of goods, of course, the retailers and the companies who take raw goods and turn them into products are going to have to raise their prices. So we'll see. We'll see what happens with that. All right. Uh, Next topic I want to get into is the IPO and SpaceX. So it was interesting. So I want to give you guys a new term. It's called road show, right? And a road show is when somebody, a CEO, right, is bringing their company public, and what they have to do is they have to travel to different institutions and different companies and produce and get some buzz around a company when it goes public, right? The buzz around a company brings a little press to the company and the stock, and hopefully, they can get their goals to get buyers into the company. Where so when they go to the IPO, you want to be your goal is to be oversubscribed for your IPO. If you're oversubscribed, meaning this is a supply and demand dynamic, it tells you, it allows you to, to allows you to get basically the price you may have for IPO price, allows you to sell shares at a higher price, which is lovely. You want the stock to go up. And a lot of times stocks after IPO will go down. So one of the interesting things, history I was just reading about Mark Zuckerberg, the owner of Facebook, right? And this was a big thing. This, when he went public with Facebook, it was like the beginning of like the AI trade and the CEO that did not wear a suit. It was a technology guy. He's like, man, Mark, I'm not wearing a suit. He went around. So a lot of times when the CEOs go on trade shows, go on a road trip, uh, uh, yes, when they go on these trips and they meet with the different companies, and they they want to be as professional as possible, right? Your goal is to be as professional as possible. You want to wear a suit. You want to say the right things, right? You want to say the right things, and you hope that your stock is oversubscribed. Well, Mark Zuckerberg was like, man, forget that. And I mean, he kept true to who he is, right? And he said, look, I'm going around here on a hoodie, and he got so much criticism for going around in a hoodie. Like people were like, man, who does he think he is? These technology guys, they don't know how to be professional. And so all in all, we know what happened. It was one of the most successful IPOs, one of the most successful, one of the largest companies in the world. So the question is, and I say this because SpaceX is coming public on Friday, and it's been an unconventional IPO, right? Meaning the rules, having a set price in the beginning, and sometimes, and I love this, and I've learned to look at stocks this way, and also who is the jockey, right? Who's the jockey? The jockey is the CEO. Do they have an unconventional way of looking at things, right? Sometimes it's good, sometimes it's not good. They have unconventional way and it doesn't work. But sometimes having an unconventional view on things can, can be a plus for shareholders. SpaceX is coming. It's a lot of a lot of rules and different regulations. I mean, it's immediately going into the NASDAQ, right? And matter of fact, if you own the Qs, which is a NASDAQ 100 ETF, QQQ, you automatically have access to SpaceX. You don't even have to buy SpaceX at the IPO, right? But it's only be a small allocation. And matter of fact, when we look at the Nasdaq versus the S&P, I think that the S&P is like 20 times the size in regards to market cap of the Nasdaq. All right. So therefore, you only have a small allocation. But let me tell you what happens as SpaceX will grow, just like as we look at the so what happens in these indexes, they'll have the number one company in the index, like Nvidia. A lot of times for a while was like the largest company held an index, meaning the indexes hold the largest percentage, and they hold companies as a percentage. But what happens is as companies come public and they move along and their revenue grows and they move up and move up at as a higher position in the index, that does something towards the stock price, such as an Apple, when an Apple was number one in the index, right? And then Nvidia, you look at Nvidia is number one in the index, right? So we want to look at that. And and the thing about SpaceX, they're actually going to be in the Nasdaq 100 right away. Now they wouldn't let them in the S&P, but they're going to be right away being in the Nasdaq 100. So if you have the QQQ, right? It's not invested. If you have QQQ, you will automatically have a allocation, maybe a small portion of it, maybe less than one. I don't know what percentage, but you will have an allocation to SpaceX in it. What are you doing? Are you buying? Are you should? And one of the questions that people were asking a lot of, well, should I buy SpaceX at the IPO? Right? I believe, like I said, this is a life, a market changing company, and I believe that you should buy a small allocation, a small. I say, well, let me tell you what I'm doing. I'm not going to tell you what to do because I tell you, I don't want to give you investment advice and you buy and then it goes down 50%. You're like, Donald, you told me. I'm going to tell you what I'm doing. What I'm doing is I'm buying a small allocation, maybe a few shares, right? And I'm gonna watch it. I basically sometimes I put companies on my watch list, and so I'm watching it because I'm watching my portfolio. I'll buy a few shares of it just to watch it, watch how it trades, watch how it reacts to certain news and certain, and I'll create a model around it. And then after I create my model around a company, then I'll look for opportunities to add a large position. And this is something I will probably, especially for my kids, in their portfolio, um, I will um, I will add that to their portfolio, something that they will have, you know, and as of course, you set up trust and different things, especially for kids. You like you don't act right, you're not getting anything. But you set up trust with parameters around it, and the kids will have, and my grandkids, my great grandkids, will have these portfolios that I'm setting up. Um, so but that's it, man. In regards to SpaceX, and I say, but I just think that you will have a better opportunity, right, to buy it later on. So I know all the hype is there, and everybody's like, "Well, you got to buy it." No, you should participate, maybe buy a few shares, right? And as long as it's a small portion of your net worth and a small portion of the cash you have, don't put your last dollar in it, right? Because I got to get it. Then it goes down 50%, you feel horrible. Have it be a small percentage of your overall net worth and overall cash. Don't invest your rent money. Right? Right. So, but as traders, as a trader, I believe in having a long term buy and hold portfolio. And that's where that will be. And there's all type of stipulations like So when the club and we were looking at E-Trade, E-Trade now has a new I guess sub screen in the E-Trade app where you can participate in IPO and you can put a pre-order in. And a lot of us we were putting pre-orders in for a few shit. Now we'll see if it executes at that 135. That's the thing. Will we, a lot of times we discuss, putting in bids, but doesn't mean the bid is going to get executed, right? So we put an execution in at 135 and we'll see what happens on Friday. Like I said, just a few shares, but I believe there'll be a better time for you to add a significant amount, and you just take it and put it away. It's like I said, it's going to be in my kids' portfolio. I will have it some in my portfolio, but this would be something a position that they'll have. I hope for a decade plus. All right. So I think that's it. Is this the last topic? Let me see the last topic. Last topic. All right. So yeah. So man, Oracle reported earnings this week. Man, Oracle's been getting well. Actually, I mean this thing is over percentage wise. I think since April it's been up, but it just recently crashed like 7%. And the reason is because Oracle is trying to raise money again. The big thing is that companies are trying to raise money to build out their AI infrastructure. Oracle is a cloud company; they sell cloud computing to to the to companies like Facebook and some of the other companies. They sell cloud computing. So, um, but what you always want to look at, and what this is my problem with Oracle, is that they're always like diluting. I'm gonna say always, okay. Over throughout their history, they have diluted their shareholders, meaning they um, they submit shares into the market, therefore reducing your earnings per share that you would earn as a shareholder. And this is another example for that. They're raising more money, and that's how companies have to raise money, and they're raising more money. And I understand the build out, and a lot of companies are doing that. And this is the capital expenditures, and they see here capex. That's capital expenditures that they're using to build out the AI data centers and all that. But all of these things cost money. So it's just like you having your paycheck, right? And your paycheck coming. Now you got to split your paycheck out with a few more people. So therefore, that's less money coming to you. So as a shareholder, it's less. So, but the bet is, of course, the big bet is that the stocks will improve in value. The AI and development with AI will grow over time. Will grow the income, grow the revenue over time, and that um, has been seen. Yes, we have um, revenue has increased, margins have increased, but is that due to just the downsizing that has been done at a lot of these companies? So are they going to create real revenue? And we'll see. All right, that's the issue of some of these companies. A lot of them will. I believe in AI, but what they say, man. The last thing I want to talk about is, man, just having a discussion with today. I was able to travel to Philadelphia, the Philadelphia Juvenile Justice Center program in Philly. I had a chance to speak to some youth there, some young men. It's called Young Men Empowerment. It was a bunch of us. We tried to bless young men and give some positive words and some positive information to them so they can make better decisions and move forward in their life. And man, my topic to them was get rich, right? And a lot of times that's a controversial topic. Donald, you know, um, and I asked them, say, how many of you guys want to be rich? How many guys want to be successful? How many guys of you want to be um, financially free to do the things you want to do, right? And I was just letting them know. And the reason why I said that is because what I was telling them, I said, you guys are in the greatest economic system in world history. Greatest economic system in world history. But it's up to you to take advantage of it. And a lot of times, people don't take advantage of this system and the resources that it has. And it gives to you. And one thing I was telling them, as I said, and I said this on a past podcast, I was like, look, our president was selling what's called green card. He had his version of green card, which is called the gold card. People don't remember this. I was reminded, well, I don't know if you remember it, but they probably never heard. I said he was selling green cards for $5 million for someone who does not live here in this country, who wants to come over in this country and want a citizenship. They could get it. They could get into this country for a $5 million, right? And I think it settled out at one, but it was from $1 to $5 million you could pay to get what our president called a gold card. And I said, if you think about that, as somebody, and I said, how many people do you think willing to took him up on his offer? I said it was over 1,300 people. I think, or 13,000, the number, but it ended up generating over $1 billion in revenue for people who did not care, who had the money and willing to pay to get into this country. And I said, they're paying for what you already have, right? You already have access to the stock market. You already have access to the reserve currency. You already have access. 8 of the top 10 companies in the world are based here in the United States, right? You already have access to the country that's generated more revenue in regards to GDP, called economic income, ever in world history, $30+ trillion. You've generated, you have access to that, right? That's what I said to them. You have access to that, but you have to decide, right? You have to decide to get, and I said, you just need 2 things to get rich in this country, right? All right, you need 2 things. First thing is you need an education, man, and you need an education, and an education allows you to build a skill set, right, to generate income. When you have education and you have a skill set for a job, this economy will pay you, and you can make a very good living here. In regards to around the world, you'll be one of the top income earners in the world. But you have to do that. This is what I discussed. You have to do that. You have to decide to finish up schooling, right? Get an education, get that skill set. And I was saying, you don't even have to go to a 4-year college. You can go to trade school. Plumbers, electricians, right? I was asking the guys, a lot of the guys wanted to be welders, right? You have an opportunity, right, to become any of those things. And when you become those things, right, then you got, guess what? The second thing you need is a brokerage account. And you need to invest. And I said, when you look at a stock, I said, next time you go to McDonald's, I want you to think about this. I said, when you buy a stock, you now become an investor/boss. When you go to a McDonald's or fast food or Apple store, we discussed, I want you to look at everybody in that store. And when you buy a share of Apple, now everybody in that store now works for you to generate money for you. So now that you have the job, and job is the baseline, right? It's the baseline to enter this system, this market-based system that we have. A job is the baseline. So now you have the job, which is the baseline, all right? And which is a 1-to-1 ratio, meaning you go to work, you earn, depending on what you do. But when you invest in the market, now, instead of having a 1-to-1 ratio, you got a 1 to 1,000 ratio, or how many people are working at Apple or McDonald's, the tens of thousands of people who work there now work for you. I said, not only that, I said, I want you to look at the people that go to the cash register. I said, I want you to look at the people that go to the cash register. And when they go to the cash register and you see the transactions, guess what? I said, every transaction that come in, now you get a percentage of that. A percentage of that is yours as a shareholder, as an owner, right? Now, you don't get a chance to decide what they do, because some of them will pay a dividend, right? And some of them will keep it and reinvest in the company to grow the company, grow new products or whatever. But if they distribute a dividend, you you have access to that. I said it's the greatest opportunity in the world. Not everybody can do that. Not everybody has access to that. We only have 4%, less than 4%. In regards to all that's going on, we still have less than 4% unemployment in the United States. So the opportunity is there. And people around the world come here because they just want a chance. This is a place where you can start from the bottom and go to the top. Unlike any other system in the world. I said, but it's in your hands. And like I said, people willing to pay. So if you don't want that spot, somebody is willing to pay to get that spot. You have to get that spot. You only need two things: an education and a brokerage account, and you can do whatever you want in this country. Travel what you want, buy what you want. It's all you need. And I ended up on that, man, and the kids, they were real receptive, asked a lot of questions. It's like, man, well, how can I set up the roster? Look, all you have to do is, tell your mom to open up an E-Trade account for you, and tell her to start depositing. These kids were 17, 18 years old. I said, man, by the time, if you take it seriously, you really get a job. By the time you're my age, man, you won't have to worry about anything. You'll be able to do what you want to do. And that's what it's like. Because if you don't make a decision, then having people tell you what to do will be your life. Right? And that's the difference. All right, man, this is always a pleasure, man, for you guys to give me a few moments of your time. I thank you so much. And man, until next time, all right, be fruitful. Bye-bye.
The market is volatile. The stocks keep going down. Then boom, we hit new highs. Everything is different now, but you don't gotta chase. Don't panic, don't stress. Time to realign, plan it out, invest. It's the First Fruits Podcast. We elevating with the First Fruits Podcast. No time for waiting, time to grow, give back, reinvest like that. Everything you need to know, the First Fruits Podcast. Let's go. Wow.